BEL climbs more than 2.5% after the company bags a near 2,500 crore rupee order. It takes the total order inflow in the fourth quarter to 7,200 crore rupees.
Adani Green trades more than 3% higher after the brokerage firm Macquarie initiates coverage on the stock with an outperform rating, target price of 1,200 rupees. It expects the company to lead India's energy transition and generate near $2 billion of annual cash flow.
MTNL rallies over 14% as the company received nearly 13,000 crore from the sale of assets of the company and those of BSNL.
Gensol Engineering slips ahead of its board meeting to raise funds and discuss a stock split as the company looks to support its balance sheet.
Shares of PB Fintech continue to decline. The stock is down another 4% after a similar fall yesterday. The company, remember, had announced a near 700 crore rupee investment in its healthcare arm.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as you can see, the top of our screen, well, there's going to be green that's coming up for you. The Nifty is at the high point of the day. The breadth of the market is pretty good. And the Nifty Bank as well is leading the charge yet again. Well, Mangalam, it's a good-looking screen. Getting into Holi, we would like some green after, the pullback that we've seen.
Totally, we take that point. On the Nifty Bank, which was an outperformer in yesterday's trading session, continues its outperformance on the back of good domestic data that came by. The broader markets are doing a lot better. So you have nearly 1,700 stocks which are advancing for about 740 stocks which are declining. And if you look at the green and red lines, they are far wide apart right now, telling you there is momentum which is building up in the mid and small cap end of things. The mid cap index up around 5%. A couple of notable gainers are over and above what we spoke about in the headlines itself. We have Avenue Supermarts. That seems to be finding its funk after underperforming for a while as well. Over the last 1 year, the stock's been absolutely flat, down about 2%, but this morning goes higher about 4.5–5%. Maybe the improvement in urban consumption sentiment is something that could aid the stock. The other one, we've been looking at Varun Beverages. That too was up around % in the morning, and that's extended its gains up around 3.5%. What we're seeing on that stock as well. Good time to welcome Sachidanand Uttekar of Trade Bulls for a quick technical check on the market. Sachi, the last couple of trading sessions, we've been recovering from lows. Do you believe that the bottom formation process is on and we can continue to move higher from here on? If yes, what's your call on the index, both Nifty and Nifty Bank?
Good morning, Mangalam. Good morning, Nigel. Clearly, I think the market momentum has been very stable on the positive side. In the last couple of trading sessions, we have seen that the Nifty is holding well above its 5-day exponential moving average as well. The level is placed somewhere close to 22,460, 470 kind of a zone. And that particular level has been retained, on a closing basis. The immediate hurdle for the index is placed at 22,650, where its 20-day exponential moving average is placed. So we are of the opinion that there is a very strong momentum play which is, supporting this trend, and we may see a good expansion, going forward. We are expecting this particular rally to continue towards 22,900, 23,000 during this particular series itself, and that's why we are recommending building long positions. Even for today's, from a today's closing point of view, I think 22,650 would be very crucial. We are anticipating that the base at around 22,450 may not be violated in today's session, and we may see a good strong momentum play in the second half towards 22,650, 22,700. I think this is the range where we are expecting today's expiry. When we look at Nifty Bank data as well, the 48,000 support has been very strong. The upper side of the range is placed at around 49,000. The intermediate, midpoint is placed somewhere close to around 48,600. So even here, the base formation is in progress, and we may see a very strong rally unfolding in Nifty Bank as well. So even here, we are anticipating that the initial move can be towards 48,600. But going forward in the next couple of weeks, we may see the Nifty Bank as well scaling above 49,000.
Got it. Okay, so you're sounding more optimistic, Sachi. What about individual stocks?
Nigel, I think today's momentum is clearly evident in all the defense counters, and here HL has been very consistent. If you look at last, a couple of weeks, the stock has already formed a reversal bottom. We are anticipating that this particular momentum would continue towards its 20-week exponential moving average, which is placed somewhere close to around 3880. We are expecting that the 3500 hurdle, wherein the call writers have been very confident. I think this particular level would be breached in today's session itself, and we may see a very strong momentum play unfolding here. And that's why we are recommending this stock on the long side. With a stop loss at around 34.10 on a closing basis, we are anticipating that this move can unfold towards 38.80 in a week's time. Disclosure would be that we have recommended this trading position to our clients as well. The other stock on our radar is Siemens Limited. Even here, if you look at the weekly charts, there's a clear-cut engulfing bullish formation which was established last week. Even today, if you look at the closing data, which may form, we may see this particular level of around 49.80, 5,000 would be cleared on a closing basis, and that's why we are also expecting momentum play even in Siemens. We're expecting a move towards 52.40 in a week's time, and even here some aggressive long positions can be considered. The stop loss for the trade should be placed at around 49.40 on a closing basis.
Take that point, Sachi. Thank you so much for joining in and giving us your views on individual stocks and the indices. With that, let's get you some ideas of profit coming in from our colleagues at Money Control Pro. Anubhav Sahu joins in with the stock that he's tracking.
Well, graphite electrodes industry is one pocket to look at, as it can be beneficiary of the US steel manufacturing upcycle, along with the structural trend of decarbonization. Now, HEG is one such opportunity to look at, as it is among the top 3 manufacturers of graphite electrodes in the world. Trump 2 regime is pushing for higher tariffs on steel imports to the US, and this provides an additional impetus for electric arc furnace capacities in the US, which require graphite electrodes. In recent past, the Western world has announced plans for electric arc furnace capacities of 100 million tons to be commissioned by 2030. So a likely additional electrode demand of 200,000 tons is expected by the end of this decade, which is about 30% of global capacity ex of China. Now, HEG is better placed to cater to the upcoming demand, as it has a spare capacity of 20,000 tons. Secondly, it should also benefit from its stake in the largest peer, the US-based Graftech, which is backward integrated with needle coke availability and currently running at about 50% utilization. Further, HEG's capacity utilization of about 80% compared to 65% for the industry speaks about its competitive strength. And lastly, post recent sharp correction, valuations are attractive in our opinion.
All right, with that, we'll take a short break. And as we do that, let's get you some good news, which is India's business news leader, CNBC-TV18. Just a click away on your phones. That's the all-new app that you can see on your screens in our studios out here as well. The big phone, which has all the in-depth articles, financial world updates, and everything that takes place in the markets at your fingertips. You can download the app, and what you can do is you can either get it from the Apple Store or the Google Play Store, or just scan the QR code on your screen. Welcome back. The market's holding well in the green, as you can see at the top of your screen itself. But let's focus on the oil and gas sector. We have, the Lok Sabha, which yesterday passed the Oil Field Amendment Bill of 2024, which intends to reform the legal framework to meet the current needs and market conditions and to make the sector a lot more attractive to investors itself. To discuss this in further detail, now we are joined by Prabal Sen, who's the energy analyst at ICICI Securities. Thanks a lot, Prabal, for joining in. Just wanted to understand, what role do you think private players like, say, from the listed end of things, Reliance, or public players like ONGC, Oil India, play in this? How do they stand to benefit from the amendments that have been made, or the key highlights that there are in this Oil Field Amendment Bill?
So I think there's 3 aspects, which are probably of interest. Number one is that the definition of mineral oils has been expanded to include all categories of petroleum related hydrocarbons, including shale and CBM and everything else in between. So I think it's probably a more comprehensive definition that will allow that all categories, whichever categories of hydrocarbons are there, the rights for exploration as well as development of all kinds of hydrocarbons will now be covered under one legislation instead of multiple legislations earlier. So that obviously improves the speed and efficiency of regulatory clearances. Secondly, I think the fact that petroleum lease has been now clearly identified rather as separate from mining lease, and there has been clarity provided on the terms of the lease being consistent across the period of the lease. I think that will probably go a long way in removing the uncertainty that used to be there earlier in terms of changes to maybe profit sharing or pricing regulation for the end product, and so on and so forth. Thirdly, the dispute redressal mechanism has been clarified, and there has been a clear chain of command established in terms of how to escalate and how to resolve disputes. Plus, the element of criminality has been removed from the penalties for any violation of the lease conditions, being replaced by financial penalties. Now, so all of these I think will probably encourage private participation a lot more, and even for state-owned PSUs, I think it will probably make it easier for them to go out and encourage collaboration with global majors or even larger private players. So I think the speed and the extent of exploration and development activities is likely to actually go up as a result of this legislation. Plus, with greater central control and the sort of opening up of certain no-go areas as well for exploration activities, I think the speed of sort of regulatory clearances should ideally pick up as a result of this act. Obviously, we'll have to see how it goes, but broadly speaking, I think those are the key points.
On the exploration of no-go areas itself, I just had a follow-up. Does that imply higher output? Because I was reading through the press release and it says that nearly 3/4 of the current explorable area has been awarded in just the last 10 years. Has that led to higher output, or there is still some gap? Because while this on paper sounds good, what we need to understand is the on-ground impact.
No, I think you have to understand that there is a large gestation period in terms of the exploration process. Most of the exploration basins in India are fairly mature ones. So what that really implies is that the depth at which you're likely to find oil and gas reserves is probably higher, and you're likely to have much more difficult to access resources or reservoirs. So what that obviously means is that you obviously need to have a large exploration program. If you look at the KG Basin asset, for example, the reservoirs are probably a few thousand meters below sea level. So those kinds of deep water offshore assets, even if exploration is opened up, it will take a little bit of time for the results to show through. The difference obviously is that, over the last decade, there has been a gradual access that has been provided to earlier, inaccessible areas, but it will still probably, over the next decade is when we're likely to see, positive results of that and production actually starting to flow through. I mean, a deep water offshore asset typically can take anywhere from 5 to 7 years from the discovery of hydrocarbons to basically get through to production. So I think we have to probably wait and watch in terms of how this plays out.
Okay, all right. Hi, Prabal. Always good to hear your thoughts. Let's focus on the space that you're tracking then. Crude oil prices have corrected. That's normally a positive for OMCs. However, for the oil producers, Oil India, ONGC, the play is on volumes moving up from here on. So give and take everything from the oil and gas space. What is your top picks?
I think, given the way that the stocks have behaved, we have a largely positive stance across the space. I would probably continue to be constructive on the city gas distribution space in particular. I still like MGL. I still like GAIL to that extent. I think Oil India probably is very attractive at these levels. HPCL among the OMCs would probably be a standout. So those will probably be the 4 top picks. But in terms of recommendations, we are largely positive on the space with probably, a slightly negative stance on Petronet LNG and cautious hold stance on Reliance at this point of time.
All right. Thank you so much, Prabal, for joining in with your insights and topics as well. Always a pleasure speaking with you. With that, we wish you and your team a very happy Holi. Take a short break, come back, focus on the markets and a lot of stock-specific action. Stay with us.
Well, here's a CNBC-TV18 exclusive. Skincare startup Minimalist co-founder and CEO Mohit Yadav told CNBC-TV18 that they will continue to run the ship even post the HUL buyout. He told my colleague Shireen Ban that they hope to turbocharge the expansion plans with the help from the FMCG bear month. Let's hear that conversation.
You pretty much will continue to operate as an independent island within the large HUL framework. Now, how did that come about?
It was an easy decision. We needed this to happen. They were also aligned that this is how it should work, right? We should continue to operate where we are doing. We should continue to do what we have been so far. So I guess.
So you run the ship?
We run the ship, yeah. So
There's no change in that?
No change in that.
Even though ownership has changed completely?
Yeah.
Give me a sense of how you turbocharge the growth ambition and the growth plans for the company from here.
I think the three very easiest growth lever, one, as I said, is our offline expansion. So with them, we know which store, what data, what is relevant, not relevant, then exploring this entire piece, understanding, for the next 2 years, how many stores are relevant for us, how to plan. They already have an on-ground team. We can leverage a lot of those things, right? So I guess so far we are in some 2,000 stores, and we took almost 12 to 18 months to be here. In next 2 years, we can easily target anywhere between 15 to 20,000, right? 10 times more than what we have achieved. And all that, again, can be done very seamlessly. Second is international. While, of course, we started working in these markets, we have some bit of retail partnership. But every new market you enter, you have to, again, figure out who are the right channel partners. Yeah. You have to have those relationships and all.
And that's where the Unilever system will kick in.
And that cycle take anywhere between 4 to 6 months, right? Again, with HUL, given they are present in most of these markets.
Yeah.
And now, because of their prestige portfolio, even we know, say, which channels have performed better, say for Paula's Choice, K18, other brands, then what should be our distribution strategy. All that is now easily accessible. Third is their the global R&D centers. Whatever we have been doing in terms of our own clinical studies, test, evaluating ingredient, they have been working on multiple things.
Yeah.
So we have a easy resource we can tap in.
Right. Minimalist is growing fast and faster than what they've anticipated, would benefit HUL because of the acquisition that they've made. But that's about the time that we have on this edition of Chartbusters. From Nigel, me, wish you guys once again a very, very happy Holi. Have a good one.